Understanding the distinct meaning of miscellaneous expenses is crucial for anyone involved in managing a business's finances. It's one of those terms that might seem simple on the surface, but once you dig deeper, you realize just how vital it is to the health of an organization. So let's break it down. What exactly are miscellaneous expenses? At its core, miscellaneous expenses, often abbreviated as Misc, expenses refer to costs that don't neatly fit into any predefined category. Think of them as the catch all for those small, often unusual expenditures that pop up in the day to day operations of a business. These could be anything from office supplies like pens and paper to the unexpected costs of a business trip. You know, those little things that can easily slip through the cracks if you're not careful. Now, why is it essential to keep track of these expenses? Well, for starters, they can significantly affect your financial statements. If you're not accurately recording these costs, you might end up with a distorted view of your company's financial health. Imagine trying to make strategic decisions based on incomplete or inaccurate data. That's a recipe for disaster. When budgeting for miscellaneous expenses, businesses need to allocate funds wisely. It's all about finding that balance, ensuring you have enough to cover these necessary costs without going overboard. One effective way to do this is by utilizing expense tracking tools. These tools can help you continuously monitor where your money is going, allowing you to identify areas where you might be overspending. But let's not forget about cash flow management. By clearly seeing your miscellaneous expenses, you can manage your finances more effectively. This clarity can also help you spot potential growth areas or opportunities for cost savings, which you can then reinvest back into your business. It's like having a financial roadmap that guides you toward making informed decisions. Now, let's talk about some alternative terms for miscellaneous expenses. You might hear them referred to as incidental expenses, out of pocket costs, sundry expenses, or general expense accounts. Different industries may have their own terminology, but at the end of the day, they all refer to those pesky little costs that don't quite fit anywhere else. For instance, in the restaurant industry, there might be a line item for miscellaneous that covers ingredients not included in meal costs. In finance, they might simply be labeled as other expenses. Regardless of the name, it's crucial for everyone in the organization to understand what miscellaneous expenses entail. This understanding ensures that employees can accurately report their costs, leading to a clearer financial picture for the business. However, there are some common misconceptions surrounding miscellaneous expenses that we need to address. First and foremost, miscellaneous expenses are not personal expenses. This is a critical distinction. While some costs might seem personal, like snacks for the team, they're still business expenses because the company pays for them. Another misconception is that miscellaneous expenses are startup costs. They're not. Startup costs are one-time expenses incurred before a business begins operation, while miscellaneous expenses are ongoing costs that arise during normal business activities. Let's not confuse miscellaneous expenses with investment-related expenses either. Miscellaneous expenses are day-to-day operational costs that don't yield a direct return on investment. They're not about making money, they're about keeping the business running smoothly. And while we're at it, miscellaneous expenses are not travel expenses. Travel expenses are specific costs incurred while traveling for work, such as airfare and lodging. In contrast, miscellaneous expenses can encompass a broader range of costs that don't have a predetermined budget. Lastly, it's essential to clarify that miscellaneous expenses are not hobby-related expenses. They must be necessary and reasonable costs associated with running a business. Now, let's explore some examples of miscellaneous expenses in accounting. Picture this: a company hires an external contractor for a specific service. The costs associated with this contractor, including any travel expenses, would fall under miscellaneous expenses. Or maybe the business needs new office furniture or equipment. Those costs would also be categorized as miscellaneous. Consider a scenario where a company incurs legal fees due to a dispute with another organization. Those fees would be recorded as miscellaneous expenses. Similarly, if an organization hosts a special event and incurs catering and decoration costs, those expenses would also be categorized as miscellaneous. The calculation and reporting of miscellaneous expenses are vital for maintaining accurate financial records. These expenses should be included in the income statement under other operating expenses. Depending on how they're incurred, they may also appear on balance sheets or cash flow statements. Now, why is tracking these miscellaneous expenses so important? For one, accurate forecasting is crucial. When businesses plan for the future, they need to know how much things will cost to keep their budgets on track. By understanding their spending patterns on miscellaneous expenses, companies can better anticipate cash flow needs and make informed decisions about resource allocation. Tracking miscellaneous expenses also helps reduce waste. It allows businesses to identify areas where they might be overspending, which is especially important when resources are tight. By analyzing these expenses, organizations can streamline their operation and make the most of their budgets. Let's not forget about tax compliance. Keeping track of miscellaneous expenses can simplify the tax filing process. Accurate records mean you can identify eligible deductions, potentially lowering your tax bill or increasing your refund. When tax season rolls around, having organized records will save you time and stress. Improved decision making is another significant benefit of tracking miscellaneous expenses. When you have a clear understanding of your financial situation, you can make informed choices about where to allocate resources. This clarity can help you identify opportunities for growth or areas that need attention. Finally, increased efficiency is a natural outcome of tracking these expenses. When you have organized data about your spending, budgeting becomes more manageable. You can eliminate guesswork and make informed decisions about your finances. So, how do miscellaneous expenses differ from other types of expenses? Unlike predictable costs like salaries and rent, miscellaneous expenses can be unpredictable and often require quick decisions when they arise. This unpredictability makes it essential for businesses to plan for these costs in their budgets. Moreover, many miscellaneous expenses can't be deducted from taxes, unlike other business costs. This distinction can significantly impact an organization's net profit, making it crucial to track and manage these expenses effectively. In conclusion, understanding miscellaneous expenses is vital for any business. They encompass a wide range of costs that don't fit into other categories, and accurately accounting for them can make all the difference in your financial reporting. By tracking these expenses, businesses can create accurate budgets, manage cash flow, and ultimately improve their bottom line. So, whether you're a seasoned financial professional or a small business owner just starting, take the time to understand and track your miscellaneous expenses. It could be the key to unlocking better financial management and ensuring your business thrives in the long run.